In this video, traders, we're going to look at useful trading clues from the open, one for day traders, but also one for swing traders if you're looking for that extra edge where you think that momentum may start. Stay tuned. Hey guys, well, welcome to you. So the open is such a key part of the trading day. Why? Because that's when the bell goes, that's when basically the starting gun goes and everyone's off to the races. Now, I know there are pre-market sessions, and by the way, the open here can well be for indices, it can well be for equities, obviously. It can also be for, like a New York session starting, Asian session, London session starting for currencies. I know there's not a specific bell going off, so to speak, but the reason that these things are useful is that, yes, you can trade pre-market if you're looking at equities. Yes, you can, in US equities in particular. Yes, you can trade currency before the bell goes, so to speak, the hypothetical bell goes, the metaphorical bell goes, should I say, in London. But the point is, at a specific time point in all of the markets, something additional is happening, i.e. options are starting to trade, i.e. open outcry if you're talking about commodity. Something else is going on. Other markets are open, which means there's always a significant point in time which we call open. So for this example, I'm going to say, okay, the open is the equity session, well, that's 2:30 UK time. For the US session, 8 AM UK time, FTSE DAX, but it can be for everything. So just get that clear. Right, so what I'm going to look for now today in this video, guys, is useful trading clues from the open. So what are we trying to do here? So the open, we're trying to decipher where the market is going to go for the rest of the day, or how the market is going to behave. We're going to try and get some clues, and we can. The open is so useful for us. Now, is this useful for day traders? Of course it is. This is predominantly why we're doing this. For a day trading, we want to see where the market's going to go, where potentially it's going to tag levels, how we can jump on board it, how we can fade it, all that kind of stuff, and adjust our plan. And we'll look at that in a second. But also, if you're a swing trader, this is perfect as well. Let's say you've earmarked and analyzed and said, I've got a basket of stocks here, I'm looking to go long on if I see the right trigger. Then analyzing the open of those stocks, all those commodities, all those currency pairs can give you a clue to say, hey, this might be the day, or you know what, this is probably not going to be the day I get the price I want. Let me back off. So it gives you that extra layer of edge and opportunity. Right, okay, so let's have a look at some of the things. So if we can imagine now, we want to look at the opening bell, off we go, the bell goes, price opens. So the first thing we need to look at is obviously the position of the open. So if we have a scenario now where the market's closed here, by the way, this, like I say, it could be any market we're talking about. This isn't going to be specifically for FX if there's a gap, but what we want to see is where it opens. Now, I'm going to look at a gap later on, but what I want to talk about now is the position in terms of, okay, the open is spread everywhere. Okay, everyone says in the Financial Times, in Wall Street Journal, this kind of stuff, this is the opening prices often recorded, especially for the bigger markets. We opened here, we did this, we did that, and it did us this during the day. So it's a key print. So even if you're in the FX market, people are going to say, well, we started London, Sterling started London open around this, so there's still a reference point, and that's why it's important. So whether or not it's a gap or not, we'll look at gaps specifically in a second, but we want to see where this reference point is, the position of this relative to prior day's trade, relative to prior week's range, relative to anything significant price-wise in the past, however many days. I know that's loose, and loose is a variable, but we could say we could have been rallying really aggressively the day before. We don't care, the prior 7 days, because it's irrelevant, right? The one that's relevant is the prior day. Or we could have been in a range for the past week, and we're at the top end of the week, top end of the range for the week, in which case that prior Monday's high is useful. So that's the point. It's the position of the price. So we want to see, okay, people have had opportunity now to kind of make their bets, so to speak, the auction process where the London Stock Exchange gives us the opening price of the UK shares. Specialists adjust on the New York Stock Exchange the opening price of those stocks. So it's almost a bit of an auction process. So what is it telling us? What is it telling us? It's saying, okay, well, actually, maybe we had a significant updraft the prior day, and the open is at the high of that surprise. Okay, so that's a clue, right? That's a clue. It's showing that there's still some demand there. Will it continue for the rest of the day? We don't know. We're going to look at the other clues in a second. But it's a first port of call, tick. okay, the open is kind of much lower now. We've gapped down, or we've had an overnight drift. If we're talking about a different session, let's say we're talking about FX, and we've had US session, Asian sessions drifted back, London sessions here. That's a little bit more interesting. It's like, okay, it was a little bit less interesting, should I say, because we've given back the gains. So maybe the supply-demand imbalance isn't so aggressive. So the position of the open, what's the clue on that? Many people just forget it and go, well, it's open at this price. But just stopping for a few minutes to say, okay, I need to think what this means. A lot of the time it's going to be irrelevant, right? We're going to be sitting in, as we said before in the videos. And by the way, you know, if you're a subscriber, it's much appreciated, guys. Thank you for your support. You'll notice that we talk about, hey, the majority of the time markets are kind of doing something that there isn't much edge. They're up and down a little bit, left, right a little bit. There's nothing going on. So when you do this analysis of the open, you're going to say, okay, it's not really that relevant. We kind of were up a little bit yesterday, we had a bit of a nothing range, and we're kind of down a little bit today. And that's fine. You just put it down as there's no edge to be gained yet from the open. But often there is. And let's not overlook that, because that can be the start of something. And it's so powerful to be able to have a hypothesis early on. And normally, from my perspective, I would have a hypothesis of what I think the trading day may do. And then I'm going to try and see evidence that will convince me that that's going to happen and that I'm on the right side of it, or wrong. It doesn't matter at that point. It's just like, okay, my hypothesis is a range extension, for example. At the open, we've got a bit of a gap up, we're holding, we're pushing. All that hypothesis is still correct. I mean, now if I get an open and we're quite quiet, nothing much is happening, I might adjust the hypothesis to, okay, maybe we're gonna have an inside day today. How can I position then accordingly? Where do I want to start fading levels? Because inside day, I want to be looking for mean reversion as opposed to range extension, that kind of thing. So the position of the open, so important. We want to see how it's relative to, in its relationship, or how it is relative to the prior day and the prior week, or whatever it may be. So the second one is range. So range is, we look at the opening range. Now, some people say that's the first 15 minutes, some people say 30, some people say an hour. Doesn't really matter as long as you're keeping a benchmark. And all we're doing again is, this is the thing, guys. And if there's one takeaway from the video, it's this. Anytime we measure something, it's always what it is relative to something else similar. So in other words, where's price relative to the prior week? Where's price relative to, what's price range relative to previous 5 days range? That's the key. It's not saying, well, this is going 200 pips range in an hour. Yeah, but if we've had the same level of extension in the past 7 days, it's average, right? But if we've had 10 pips and all of a sudden we've got 200, now we're cooking, now something's going on. So anyway, range. So we're looking for the first 15 minutes, looking for the first 30 or the first 60. I like kind of using, I don't want to say just specifically one, because often if you're using the first 60 minutes, you're going to miss a lot of the trade, let's be honest, right? A lot of stuff's kicking off, especially for a day trader. And if you want to get on a good level of a swing trade, if you're waiting for the first 60 minutes, often, guys, that's the high and low of the day. You know, the first 60 minutes can be really aggressive, and then you kind of sit in there for the rest of the day. You might get an afternoon break, but sometimes you miss the meat, let's be honest. So 15 is a nice, if you can get it, to kind of measure that. 60, if you're thinking, okay, I'm measuring this with a hypothesis or a theory of using that evidence to do something in the afternoon. That's, to me, how it would work. Your 15 minutes is to do something now. Your 60 minutes to say add evidence to suggest that I want to do something later on in the afternoon. And this is a kind of another layer of edge for me. So 15 minutes, what's the range? Relative to prior day, prior day, prior day, prior day. 60, what's the range? Prior day, prior day, prior day. And again, how has it behaved? In other words, have we just rocketed up and we've held at highs, like this example here? Have we rocketed up, rocketed back down? How have we spiked up in the first 10 minutes and then sort of sat in the mid-range? All this kind of stuff is useful info, because it's giving us a little look under that bonnet and say, okay, it's not so healthy. You know, it was a little bit of a spike. It looks like it might have followed on again from the next day. What's the position? Okay, we've opened at highs, we've spiked up, now we've kind of just drifted lower. Is that the exhaustion of the move? Do I now need to be looking for a fade back to a support level of the prior day? Do I now need to wait for another big momentum ignition to push the drive higher? These are the kind of things, questions you're kind of asking yourself. So position and range. Right, guys, now I'm going to do, in the second part, in another video, we're going to look a little bit deeper at how the open is useful, what we can use from the open, how we can measure it to give us more evidence and edge, and we'll look at some potential setups as well. Stay tuned.